Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK, and in today's video, we're going to talk about something just a little bit more serious. We've had some discussions on this channel over the past, month and a half, about a potential altcoin season that we believed, at least on this channel, to be around the corner. Now, we were basing that on some of Bitcoin's price action. A lot of that was contingent on 32,500. We had higher targets in the cards as well, but that was really the big one, was 32,500. Now with this recent pullback and with Bitcoin's inability to hold 30K, the question is, has my opinion on that altcoin season changed? Is it still in the cards? Will it happen sooner? Will it happen later, if at all? We're going to discuss that in today's video. We're going to look at a couple of charts, Bitcoin being one of the obvious ones, just to kind of get an idea of where we believe the price of Bitcoin may or may not go over the next few weeks, the next month or so, and in turn, what will happen with the altcoin market. Now, if that sounds interesting to you, as always, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Okie dokie. So the very first thing that I want to just quickly discuss kind of before we go into today's analysis is just kind of a simple, I guess, thought that maybe not a lot of people have as it relates to Bitcoin and the entire crypto market. And that thought, at least that I have, is this. Now, you have to understand that Bitcoin at the end of the day is just another stock, right? It's a risk-on, it's a risky, essentially, tech stock, right? And if you just do a simple Google search, which I did right before making this video, you can see that something like Bitcoin's market cap on Google says it's 534 billion, or just over, at the time of making this video, right? That's the entire market cap of Bitcoin, right? Which we know governs the altcoin market because it's kind of like the daddy, or the original coin that everybody associates the crypto market with. And if we look at something like Tesla, which is obviously one of your biggest tech stocks, it's 517 billion, or just over. So very, very similar. So at the end of the day, when we're doing these analysis, you have to realize that when you're looking at a chart, it's still just a chart that has bigger things that govern its price. So, we can make predictions, or at least make some sound technical analysis based on probabilities, but at the end of the day, it is just a stock. And if the overall stock market's not doing well, or if bad news comes out of some sort, whether that's job related, inflation related, war related, maybe that specific coin or whatever, right? But in general, if you have bad news that governs the overall market or the overall landscape of stocks, Bitcoin's not going to be, I guess, immune to that. Now, I'm not suggesting that outside of that, Bitcoin and Tesla have anything else in common, and I'm also not suggesting that there's been any bad news that has governed, this most recent pullback, or the majority of the pullbacks. It just wanted to kind of start today's video out, making those that maybe are newer to markets in general, or to Bitcoin or crypto, just understand that there's an ebb and flow to the markets as a whole. And, sometimes there's going to be upside for long periods of time. Sometimes there's going to be downsides for long periods of time, what we refer to as bull markets and bear markets. And then other times there's just going to be a lot of sideways, boring action, little moves to the upside, little moves to the downside. But overall, on higher time frames, you might look at those time frames or those periods of time as more or less just consolidation periods, or better yet, or what we would hope for in this case, accumulation periods. And with that thought, I also wanted to add that I had a guy in my Telegram group message me the other day, and he was just curious based on this chart. I don't know if I've ever shown this chart on my channel. I think I have. I think I actually made a video where I talked about it, but it's the Wall Street cheat sheet. It talks about the psychology of a market cycle. If you've never looked at this before, I would suggest looking into it. I'll even leave a link in the description to one of the websites you can find this on that kind of goes into more explanation. But in general, it's just kind of showing you how a market cycle works as far as the different phases of it. If we zoom in a little bit, you can see that you have this kind of disbelief, and then you have this optimism during the rally, belief, thrill. You have what's called euphoria, usually followed by a large pullback, another pump, complacency, and then as the major pullback starts leading into the bear market, the big dump, essentially you have anxiety, denial, panic, eventually anger, depression, and so forth. And I guess he was just curious where I thought we were at. He was wondering if maybe he thought that we were at the disbelief, essentially, or the hope, kind of leading into the next, bull run. Now, I didn't have the greatest answer when he asked me about this. Number one, because it's not really something I've done a lot of studying on, so I wouldn't really be qualified to give a great, in-depth answer about it. But What I did find interesting, at least, is that when you look at this, it does very closely in a lot of ways follow the price of what Bitcoin did, especially if you follow the the blow off top. You kind of had this blow off top here, which you could look over here was euphoric, right? You had this large pullback, kind of represented here on the right, had a good pump to the upside. This would be considered complacency, followed by just a continuation to the downside, with what could be determined to be the many, cycles or different emotions that people went through during those times: anxiety, denial, panic. If you look here on panic, if you zoom in, it says everyone is selling, I need to get out. And a lot of times when there's panic, that usually means you're closer to the bottom than you are the top. But at the end of the day, usually there is still a lower to go. You can see that if we kind of did follow that, or have been following that idea all the way on over to potentially where he believed we might be. This belief, which, at the end of the day, I don't know where we're at. I think my answer that I gave him was more along the lines of, I don't think these things are ever going to be 100% move for move anyways. But what I did say, or what I do believe at least, that I want to share with you guys in this video is, I do think we are closer to the bottom than we are the top. Another way of saying that actually is I think we're closer to the end of the bear market actually than we are the beginning. And then just one other thought I wanted to share as it relates to like a chart like this is I do think it has an uncanny ability to kind of nail time more than it does price. And what I mean by that is, sure, it's pretty cool or pretty crazy to see that it's more or less, you could practically superimpose this right over the top of Bitcoin's price and it almost looks like it's matching it move for move. But do we expect that to continue, or could that have been just a little bit more luck than anything? Possibly so. I'm sure if you took the price of some other assets, they wouldn't necessarily fit this quite as well as Bitcoin has. But what I do think it's showing us is that, or at least I believe, is that, hey, we probably have seen the bottom, or at least really close to it, and we're probably in kind of this whole phase here, which is more or less a lot of lack of interest in the market. And we've had some phases where Bitcoin most recently broke 30K. I'm sure that brought a little bit of excitement back, but for the most part, you're not seeing YouTube reviews going up too crazy just yet. We're not seeing retail back in the market. And retail doesn't normally come in until we start breaking back above some of those prices that are higher than we are currently, right? So I generally believe that we're in kind of a period of the market where it's still bear market, but it's more of the, I guess, accumulation zone in my opinion. And I think that as we discuss coins or ideas over the next few weeks to few months, that generally speaking, if you're a long-term investor, I think you're in the market at the right time. And I think that these prices that we're at, we're going to be kicking ourselves in the next 1 to 2 years, if we didn't purchase some of our favorite coins we believe in at these prices. Now, one of the first charts that I always look at, and those of you that follow my channel for a while know this to be true, as far as determining what I think Bitcoin could or could not do, over the next few weeks, few months, bigger time frame ideas, is the DXY. Now, the DXY, for those of you that are new to this chart, it's the US dollar index. More or less, it's a chart that displays or shows what the strength of the US dollar is. And the way that it does that is it just puts it up against a basket of some of the other major currencies, things like the yen, the euro, the pound, right? And basically, generally speaking, if this is going down, it means the strength of the dollar is going down. And that means that more or less people are putting their money out of the dollar bill, most likely into other assets. Sometimes it's into the other currencies, of course, which is why the strength is going down. But often it's, we've observed it's going into stocks, long-term investments. And generally speaking, when this is going up, like it has, many, many times in the past, kind of like this big move here, oops, wrong button. Here, this represented a pullback in stocks. This entire time frame from the beginning of June or mid-June of 2021 until it peaked in September of 2022. This represented a big pump in the dollar strength, or the DXY, but it represented a big pullback if we were to look at something like the SPX, the S&P 500. I'm not going to do that in this video. You just have to kind of trust me on that. But this was basically a big spike for the dollar, big pullback for markets. And ever since that peaked, we've seen the markets rebound as this has more or less found resistance and been pulling back. Now, if we're looking at this on higher time frames and we're trying to judge where we think Bitcoin could go over the next few weeks to few months, maybe even the rest of 2023, well, if we look here on the weekly, I think I said I was on the daily, if I did say it all, but this is actually the weekly chart. So this is very, very zoomed out time frame. But basically what we're looking at is this blue area on my chart where we saw kind of resistance, 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 pullback. This was good for stocks when this happened. Saw some more pump to the upside, resistance at the same area, pullback. Kind of saw what we call as traders a big double bottom right here. This was the neckline. and we broke out of that back in May of 2022, which if you remember, there was a pullback actually in crypto stocks in general, May of last year. Well, that was this giant breakout of this area that had been resistance dating clear back to 2015, right? This big zone that the DXY, or the strength of the dollar, had been inside of. It broke out to the upside, and as you know, if we zoom in right now to where we currently sit on the DXY, which is just over 101, you know, we're more or less retesting that giant blue zone as potential support. So then I guess the next most logical question will be, is this going to break down or is it going to bounce? Well, just from a TA perspective, we have to assume that this previous level of resistance until it breaks is currently support. Now, when it first broke out and retested it, this was a big pump out of the DXY that represented one of the worst time in recent memory to be in stocks. You know, this time frame between, which we'll look at here in a few moments on the SPX or the S&P 500, but basically from May of last year until, you know, early September of this last year, this was a giant move to the upside for the DXY and a big pullback for stocks. Well, it found its top, and obviously we've been in this, you know, period of time where it's been good to be in stocks, so they've overall seen a bounce. But my point being is, until we lose this as support, it's better, if you're not already in the market right now, to be cautious. And if you are in the market, you know, yes, we can still rally in the short term. It was an idea we were talking about for the last few weeks to a month on the channel, you know, but at the end of the day, we viewed it, at least I did, as just that, a rally. And has it found its top already, or is it close to finding its top? Well, a chart like this, if this was the only chart you were to look at, could maybe suggest that. One other thing we can quickly look at while we're on this chart before we move on, that just kind of collaborates, or however you say that word, the idea that a pullback over the next few months to year is possible, you know, generally speaking. Doesn't mean it has to be a giant pullback. It could be sideways as well, accumulation. But anyway, if we double click, we can see that on the RSI, which is this indicator I have down here in purple, that it has a history of putting in double bottoms down here kind of in the oversold areas. Anything really below 40, closer to 30 is better. It's more oversold anyways. Before going on rallies, you can see it did it there before this big rally. We can see that it kind of did it here before this rally, which was here. You can see as recent as like 2017, the RSI double bottom before this rally, and even more recently in 2020 and 2021, you saw the RSI bounce kind of on this trend line I have drawn, and that was really what led into the really big rally that we most recently saw, a big pullback overall in stocks. And if you zoom in here on the chart, you can see that, not that one, sorry, you can see that we're basically at that same kind of area, or that same kind of idea where we bounced once. That was this bounce here, and now we're at that area again, and that trend line as well, looking to bounce. So if we're going to bounce, and this is to bounce at this blue zone, we have to assume that because it's done it so many times in the past, it could do it again, and that would mean that while it's bouncing, whatever that bounce ends up being, that it won't be the greatest time to be investing in stocks as a whole. Now again, I want to reiterate that was the weekly chart for the DXY, so those ideas will take longer to play out. There's something that could govern maybe the next 2 to 12 months, something like that. Whereas something like this chart, which is the SPX 500, the S&P 500, this is the daily chart, where it's a lower time frame, it may tell a different story, right? But the stories will eventually match up. This might tell a short-term story that eventually leads into the higher time frame story, or it could tell the same story now. And what I mean by that is, we know that on the daily, something we followed for some time, that the S&P 500 was inside of this large falling wedge. You know, we kind of discussed this at length. We talked about how the last high inside the wedge was here. We finally got a break out of the wedge. We put in a higher high. We'll go ahead and put HH here, represent higher high. What we wanted to see to follow that was a retest of the wedge, or at least a higher low. We got the retest. We also got a slightly higher low. At the time, I made a video talking about this potential hidden bullish divergence, which was just price action putting in a low and a higher low, while the RSI, if you look at the 2 points during that same swing, they actually put in a low and a lower low. This is what's known as bullish divergence or hidden bullish divergence. It just meant that at that point we were more likely to see a bounce. We got that bounce. Actually, we got quite a big bounce. We're at more or less a crossroads. And what I mean is this chart, which I think will govern what Bitcoin does in the short term, is at decision time. You have kind of this area that I talked about, which was the last higher high, you know, basically somewhere up around 41.80. And although we're just below it now, we recently retested that area as resistance. The question is this going to turn into a big M pattern, which is what we call double tops? You know, where the same area of resistance gets, you know, price action gets rejected at it twice, and then you see a big move back down, basically to the support level that started it, right? That's what makes the M. Or are we actually going to see the breakout and a move higher? I do think that this is the chart that I'll be watching specifically as this next week opens. If we continue to see a break, you know, or at least a rejection at this area that we were rejected at back in February, earlier this year, and especially if the S&P 500 loses this red zone that I have on my chart, which really is right around 4,000, let's say 4,070. If we lose that as support, there's a very good chance that at that point it confirms the double top, and we're likely headed back down here, you know, possibly over the next, you know, several months to even a year, clear back down to kind of where this whole rally began back in March, which was around 3,800, right? Doesn't mean it's going to happen, doesn't mean it'll happen quick if it does, but just something to keep an eye on. In the short term, if you want to see this rally in stocks continue, we need to see 4180 flip to support, because at that point, you know, we're most likely headed clear back up here to like the 4300 area, and this could represent, you know, another big move to the upside out of stocks, and of course Bitcoin and crypto to follow. So then that brings us over to the Bitcoin chart. This is the daily chart, and again, just another chart where we're going to talk kind of about the more zoomed in ideas, but understanding what levels I believe are very important on the higher time frames. Now, on the higher time frames, especially for the DXY, we talked about the idea that, hey, it's looking like potentially it could be setting up for a bad time for the next, you know, 6 to 12 months to be investing. Well, Bitcoin specifically, what would I consider to kind of corroborate that idea? Well, it would be a breakdown, essentially, of this $25,000 price action. Why is that number so important to me? Well, if you look, ever since this pullback, or this, I guess, dump pull that happened in June of 2022, where we saw Bitcoin go from basically 31,500 all the way down to 17K, just over the course of a few days, that level, right around 25,000, is the first level that we got rejected at after a major bounce. Clearly, price action went lower. We put in what I believe was the low, but at the very least, it's definitely at least a local low, or some sort of a macro low. And then we got rejected again at 25,000 before another dump down, and then we broke it. So we spent a very, you know, sustained period of time below $25,000. Now, on the daily chart, this is an important level, because if you look at this orange zone I have, which we're going to call the neckline of basically an inverse head and shoulders, well, if we pull back to that over the next, you know, few weeks to a month, but we accumulate there, or it holds a support, well, then it would just be looked at on these, you know, at least the daily time frame, as one big breakout and, you know, a retest. So really, if we're looking for this rally to continue throughout this year, in the short term, I guess the biggest level you'd be looking at is 27K. You can kind of see this is the first area after a big dump that buyers stepped in, and most recently, as we broke above 25K, 27K is actually what became kind of our most recent support. So there's not a ton of strong support there, but in the short term, you know, if it were to visit that price, could we see a pretty good bounce from there? I would say the answer is yes. The more important level that we just discussed would be 25,000 essentially, if we lose that level. And really, at that point, if we don't begin to bounce from there, then you have to assume some of our bigger time frame ideas with the DXY and such are taking over. And we'd have to scroll clear out to the weekly to get a better idea of what Bitcoin might do if it loses those support levels that we just talked about. And if you scroll out, you can see that below that, really the only strong support we have would basically be these areas that represented the high for the last, you know, bull market, the previous bull market, not the one we just had, obviously, but the one dating back to 2017. And that's between about, you know, basically 19.5 and 21K. It also acted as support in here before our, you know, major dump, and it was most recently retested just over 20K. We saw the big retest back in, you know, March, price action dipped just below 20, and we saw a strong reaction off that point. So, you know, I know this isn't really good zoomed in analysis, but that's really not what this video was. But just my general, you know, I guess feel for the market is in the short term, we need to see price action basically either hold the 27K as support, definitely 25K. And if we zoom back into the daily, if we want to see, you know, upside areas that could give us bullish opium, you know, areas that we can break back above to become bullish, I have this blue line that I talked about a few weeks ago on one of my videos that represents the price. Basically, we'll just call it 29K to make it an even number. But we had broken above that, but since we were not able to flip it as support, if price action continues to go lower, well then this whole breakout move here would be considered a bull trap. It just means people got bullish when that broke. A lot of buyers, you know, purchased to that level, but the seller stepped in, we lost that level, and now a lot of the bulls that decided to wait and buy Bitcoin at 29K rather than down here at 20K, well now they're trapped, at least in the short term, right? Or possibly midterm. So to the upside, keep an eye on 29,000. If we regain that, then I think there's a good chance that at the very least we retest, you know, between 30,500 and 31K. And of course, if we break that, then we're back on for the 32.5 target and so forth. But the question is this rally starting to run out of steam? You know, this recent pullback would suggest that that's very possible. And because of that, we have to assume that any, you know, bounce we get at this point, if we don't break 29K, is just that, a bounce. And then we keep our eye on these other levels that I just talked about, which is 27K, and the real important one, right around 25K. I appreciate you guys sticking around to the end of the video, and I want to leave you guys with this final note. Just remember that if you're here, you're watching this video, you're watching other videos, you're in the right place. You're in the market at the right time. You know, maybe this isn't the bottom, but we're surely not at the top, and maybe we don't move for the next 6 months or a year, you know, to any new all-time highs. You know, in fact, probably a little bit longer than that in most cases, or at least for most coins. But that being said, the fact that you've stuck around, if you've been around a while, or if you've found crypto recently, you're in the right place, you have a bright future, and don't forget that. As always, on your way out, do me a huge favor. If you haven't already, please remember to like and subscribe. We'll catch you in the next one. It's TIMECODES.